What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update for you guys. So we're going to briefly touch upon a very important catalyst that AMC has coming up this week. And we're going to go in depth into the new over-the-counter market and dark pool data that we have received from FINRA. This is very important data that I want you guys to be able to understand. And we're going to explain everything that is going on with the data that we are going to be looking at. Now, what you have to remember is that there's a lot of people misrepresenting this data out on the internet, and I'm going to do my best to clear up all of the confusion that I have seen about this data. We're also going to be going over strong evidence of margin calls and how they are right around the corner. So we have a lot of important information to get to in this video, so make sure you guys stick around. So before we get into all of that, if you guys would like to earn 2 free stocks with Webull valued up to $1,850, make sure you check out that link down below in my description. And if you guys enjoy the information and analysis that I provide for you in these videos, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So if you guys have been watching my previous AMC videos, I was saying that we were going to have some severe volatility coming into this week. Now, at the current time that I am recording, AMC is down to 3.5%. So in my opinion, this is just another great buying opportunity to get in, add to your position, and really help affect your future once we see this squeeze. Now, I do want to touch on something that I have seen online, and I think this is very important to know. So when we come over to this June 18th, 2021 expiration date on the option chain for AMC, we see an extremely high open interest on this $40 contract, a 76,122 open interest, with again today a 2,960 contract volume. Essentially what this open interest tells us is that that's the amount of contracts being held in people's brokerage accounts. And I want to caution you guys on buying some of these super deep out of the money strikes with not a lot of time to expiration. You have to think about who is selling you these contracts and why. The amount of money betting on this $40 strike right now is about $2.2 million. So essentially, if the share price of AMC does not get to at or above $40 by this June 18th expiration date, all of these contracts will go to zero. Now, when you think about who's selling you these contracts, it's the institutions who most likely are naked shorting and over shorting AMC. So when you buy these contracts with not a lot of time to expiration, you're technically helping out these institutions. So it is possible that it is much better to just buy and hold shares, but I just wanted to point this out to you guys so you know what the risks are with buying these super deep out of the money contracts. Now, that's just the risk that has to do with the squeeze, and this doesn't really have to do with the overall risk of options. Options are extremely risky, and I would not recommend anybody trade options with an amount that they are not willing to lose. So when we move over here, we can see that AMC Entertainment Holdings, the largest theatrical exhibition company in the world, announced today that it will report its results for the first quarter ended March 31st, 2021, after the market closes on Thursday, May 6th. A lot of you guys already know this, but I just want to point this out to you because this is the main reason why I think we're going to see a lot of volatility this week, and the hedge funds are going to do everything that they can to take advantage of AMC having a significant event to keep the share price down. Now, when we come over to the most recent Ortex data, we can see that right here, the short interest as a percentage of the free float is slightly lower than the previous number that was reported. Now, I have said this a lot of times. I don't really trust all of these different reporting sources because they're all getting their data from different sources. And when you take a look at how these institutions and hedge funds are actually able to report their short interest, it's self-reported. So it's in their best interest to come out and lie to these different reporting sites to say, hey, we actually don't have this many shares sold short. It's actually this amount. And the fines for doing this are extremely low. Now, when we come down a little bit further, this is something that I think is pretty important. The current utilization is now at 99.74%. What the utilization essentially is it's the amount of shares that the institutions are willing to lend out, either to be shorted or for any other reason, versus the amount of shares that have been lent out already. What this could suggest is that shares that were previously lent out were returned to the institution. So that's why we are seeing a slightly lower utilization. So what this could suggest is that one or two institutions could have covered a portion or all of their short position on AMC. Now, what's also equally as possible is that Ortex just got new data, and we are seeing now that the utilization previously maybe wasn't at 100% before, and now that is reflected in the current utilization. So now let's take a look at some of this over-the-counter market data. So when we come over here, we can see that this is going to be the over-the-counter non-ATS data details for the month of March. So all of this data is lagging by about a month, and we can see the total number of shares traded was 1.195 billion, and Citadel again was at the top. Now, when we take a look over here, this is going to be the dark pool data. So you might be hearing people on the internet say that this is the dark pool data right here, but that's not the case. We can see OTC non-ATS data details, and when we come over to what exactly is a dark pool is a privately funded financial forum or exchange for trading securities. Dark pools allow institutional investors to trade without exposure until after the trade has been executed and reported. Dark pools are a type of alternative trading system, ATS. So when we come over here, this is the non-ATS data, and when we take a look here, we can confirm that this is going to be the dark pool data, because we can see right here, this line says Crossfinder. When we come back over to Investopedia, we can see that examples of such dark pools include Credit Suisse's Crossfinder dark pool. Now, if I'm not mistaken, the Crossfinder is one of the largest dark pools in the world, and again, we are seeing only a total share volume of 10.35 million. Now, let's take a look at this again. This is going to be the most recent non-ATS data. So a lot of these trades are going to be filled and executed on behalf of brokerages like Robinhood and Webull, because Citadel is the market maker and essentially the clearinghouse who executes these trades for these brokerages. Now, it's also possible that not all of these trades are being carried out on behalf of other brokerages, and these could be naked short shares or just a short position that Citadel is holding. We still have to wait on Citadel's filings to see what their position actually is in AMC at the current time. Now, what I want to do here is I want to compare this data, the non-ATS data for March, to the non-ATS data for February. So when we come over here, we can see that the number was about 1.73 billion in February versus the 1.195 billion in March. Now, when we compare the dark pool data, we can see that the dark pool data for the week of March 29th was about 10.35 million. And then when we compare the dark pool data over here, it was 22.87 million. So there's a couple of reasons why we could be seeing a decrease in the actual over-the-counter market data. And one of the reasons why I'm speculating on this is I think that it's because of the utilization. So if there's no more shares to be lent out, it's going to be very hard for them to actually come out and short the stock. But they're still going to have a significant amount of volume on these over-the-counter markets because they are executing trades on behalf of the different brokerages. Now, the fact that we are seeing such high volume over here on this over-the-counter market is one of the main reasons why I do not trust the short interest numbers that are being reported on Fintel, MarketBeat, MarketWatch, and even Ortex, even though Ortex is supposed to be the most accurate of all of the data reporting sources that we have. The reason for this is that the over-the-counter markets are behind closed doors. We really have no idea what these trades are. We just know the total amount of shares traded. We don't even know if these are buys or sells. In addition to this, we know that retail owns a significant amount of the total shares for AMC. Now, I want to bring you guys over to this article right here. This is called The Anatomy of a Short Attack. So if you guys want to read this entire article, it's great. It basically outlines essentially everything that we have been seeing on AMC. And this article was posted years ago. So we can see that this example right here is going to really further my argument that this over-the-counter market data is really showing us that there's a lot of action going on behind the scenes, and that's the reason why we aren't getting accurate reporting. So Global Links Corporation is an example of how wholesale counterfeiting of shares will decimate a company's stock price. Global Links is a company that provides computer services to the real estate industry. By early 2005, their stock price had dropped to a fraction of a cent. At that point, an investor, Robert Simpson, purchased 100% plus of Global Links' 1.158 million issued and outstanding shares. He immediately took delivery of his shares and filed the appropriate forms with the SEC, disclosing he owned all of the company's stock. That is very important. His total investment was $5,205. The share price $0.00434. The day after he acquired all of the company's shares, the volume on the over-the-counter market was 37 million shares. The following day saw 22 million shares change hands, all without Simpson trading a single share. It's possible that the SEC has been conducting a secret investigation, but that would be difficult without the company's involvement. It's more likely the SEC has not done anything about this fraud. That means that there were synthetic shares out on the market that were being traded in these over-the-counter markets that we are seeing here. So this right here, we know that AMC retail investors own a significant amount of all of the total shares, but we are seeing a significant volume on the over-the-counter markets, and this could be where all of these synthetic shares are being traded and created. We are also seeing something very interesting happen with the failure to deliver numbers that we have recently received for AMC. When we come over here, the failure to delivers essentially happen when one party of a contract obligation is unwilling or unable to deliver on their half of the deal. What this means is that when an institution is naked shorting a stock, they are creating synthetic shares. They have no way to actually buy back the shares that they sold because they do not exist. Now, when the time comes to actually deliver on their obligation to return these shares, they cannot do this, and that is called a fail to deliver. Now, we are seeing here on April 13th through the 14th, the amount of fails to deliver jumped from 453,000 to about 2.7 million. Now, these numbers are essentially the aggregate amount of fails, so this is not a daily amount. So when we come over here, we can actually see the figure is not a daily amount of fails, but a combined figure that includes both new fails on the reporting day as well as existing fails. In other words, these numbers reflect aggregate fails as of a specific point in time, which that just essentially means the total amount of fails that have occurred. Now, I also want to bring you guys back over to one of Just Being Punny's Reddit posts. He provides a lot of great due diligence, so make sure you guys go check him out. But we can see here that this post is going to be that JP Morgan opened 3 new netting accounts. Now, the number is actually 17 new netting accounts when you account for all of the new netting accounts that they opened in March. So what is exactly this going to mean? And we are seeing that JP Morgan has been approved for 3 additional full netting services accounts effective May 3rd, 2021. That is today. So when we come over here, we can see netting is a method of reducing risks in financial contracts by combining or aggregating multiple financial obligations to arrive at a net obligation amount. Netting is used to reduce settlement, credit, and other financial risks between 2 or more parties. What this is essentially suggesting to me is that JP Morgan and a couple of these other institutions such as Bank of America who have opened up these netting accounts are expecting defaults in the near future. Now, when we come over here, we can see that the margin debt at the current time is sitting at around 822 million. That is really substantial. And when we come over here, we can see that the margin debt, the U.S. leverage loan default rate is increasing as well. So what are the regulatory institutions doing about this in order to try to not have a massive collapse happen? Well, we did see the NSCC 005 come out the other day. So we can see based on the backtesting results above and the impact to members of raising the minimum required fund deposit amount to $250,000, NSCC believes that raising it to $250,000 is the appropriate minimum required fund deposit amount that will minimize the financial impact to its members while maximizing risk management of activity that is guaranteed at the point of validation or comparison by the NSCC. And we can see up here that the minimum required fund deposit was previously $10,000. Now, with the hedge funds having so much money all of the time, $250,000 is really just a drop in the bucket. But there's 3,440 members of the NSCC. So this $250,000 margin requirement is going to add up. I think it's about $860 billion. Somebody correct me if I'm wrong, but they're going to really be able to raise a lot of cash in order to try to raise these margin requirements and avoid a collapse. So I just did the math on the actual amount that they're going to be able to raise for increasing this margin amount. It's not 860 billion, it's 860 million. So sorry for that mistake, but that is going to conclude this update on AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a very profitable day, and I'll see you guys in the next video.